بسم الله الرحمن الرحيم الحمد لله رب العالمين والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه وسلم. First of all, I would like to thank Allah subhanahu wa ta'ala for giving a chance to share the knowledge. And I would like to take this opportunity to thank Ummat for the service, what they are trying to share, make these opportunities for all the Muslim individuals in Sri Lanka and now to give them uh, actually it's a solution which they are providing on a practical basis and also knowledge sharing as well. So today's topic will be it's a bit advanced to be honest, but I would like to keep it very simple and very practical in sense. So when it comes to modern financial challenges, it isn't only one or two, there are several, but we'll try to focus on two aspects which are offered through the Islamic financial as a solution. And I will take you all through examples and case studies, so it will be more practical in the sense. Now, this is an advertisement. If you see, if you take the papers, this was, I think, January papers were carrying this. That's saying that wealth of billionaires rose by 2 trillion in 2024. $2 trillion. Now, a trillion means 1,000 billion, right? So 2,000 billion was increase in terms of the wealthy people or billionaires' wealth. In the meantime, there are nearly 700 million people around the world who are living right below the poverty line, and there is another poverty line which was also defined by this is a document which was issued by Oxfam. So they say it's around 3.46 billion, that is around 40% of the population. So we know we are living in an era where billionaires have become much richer, right? People are having all their facilities. People are looking forward to even go to the space and
Salli
have.
salli kurulla.
So
Salli kurulla.
now we are living in this era, but the problem is while people are enjoying a portion or a segment is enjoying a better life or a luxurious life, there's a huge, large number of people who are below the poverty line. Now, if you see any economy, as a country, as an economy, they would like to achieve these goals. That is full employment. Most of the people would like to have are to be employed, because when you have more people with employment means less trouble. That means people have more money to spend. So people are supposed to have a better life. Then economic growth compared to last year to this year, the economy as an institution, as an economy, as a family, you have to grow. Then efficiency is how best we will be using the resources which are available to us. Then the stability in the economy and stability in the country, and equity, that is more or less people should be equitable in terms of spending and receiving at the receiving end as well. Now this is any economy, irrespective of Islamic economy and conventional, but Islamic economy has certain additional conditions as well, right? So we'll be discussing those inshallah in the coming slides. So if you take the world statistics, we see 700, even though we are talking about billionaires and people are getting much richer, large number of billionaires are getting added to the list every year, if you see the Forbes list. But in the meantime, there are around 783 million people who are hungry, people who cannot read and write, right? At the meantime, the luxurious market has increased by 20% nearly. That is around 1.54 trillion within a year or within a small span, a year or 2 year span. In the meantime, the spending on luxurious cars has been around 630, over $630 billion. Then people spending on wine has been over $100, right? So they say if you tax the richest people, the millionaires and the billionaires around the world with a tax rate of 5%, and if the tax is being utilized in a proper manner, nearly 2 billion people can be taken out from poverty. So these are statistics to give how rich people are on what they are being spending. In the meantime, there is a left out segment whom we couldn't reach out, or due to our economic conditions and structures, they have been left out. So in today's presentation, we'll be working or we'll be inshallah taking you all through two different aspects. One is what are the prohibitions in Islam and how things have affected the global economy, the overall. In the meantime, what are the offerings in Islam which can be used and utilized in such a manner where the world can become a better place for overall the human community. Right. Uh, any student who's studying economics, right? And the basic of economics, the basic economic problem, what we have been taught is our needs and wants are unlimited, but resources are limited. So resources, let's say the value of a resource is only 100 million, the needs and wants, for an example, is 500 million. So with this 100 million, how am I going to fulfill my needs and wants, which is equal to 500 million? So when you have limited resources and unlimited needs and wants, then we are forced to make choices. When we are choosing one, we have to let go another one, right? So when you choose one over the other one, this choice and this sacrifice or what you let go, these choices are based on economic decisions. So economics is made out of this choice of choosing one and letting go other one. You decide on different aspects. Now, for an example, a country who looks into profitability, they will use the resources in more profitable aspect rather looking into the society and the social aspect. In the meantime, a country which is more into socialism, they'll be looking more into getting jobs, fulfilling the basic needs of people rather looking the profitability of the whole community. Now, if you take now this problem of limited resources and unlimited wants and needs is known as scarcity, right? Now, the scarcity, the same thing, if we look under the Islamic lens and the conventional lens, we look into two different aspects. Number one, we have been taught resources are limited and needs and wants are unlimited, right? And we also only focus on the numbers. Is it last year to this year? What has happened? How better we are or how worse we are, right? And there's no limitation for these needs and wants. There's no we don't set limits, right? Anyone who want to have anything, if it is profitable, if there is demand, you go with it, right? But the same thing Islamic finance or the Islamic economics teach us through the teachings of Rasulullah sallallahu alaihi wasallam and the Quran. We have been taught in a different manner. The first thing is we firmly believe all our sustenance is already decided. Our sustenance has been decided by Allah subhanahu wa ta'ala. So there is no scarcity in resources. Allah has written how much am I going to earn, how much I'll be spending, my family, everything until the day of Qiyamah has been learned. So Quran clearly says, وَمَا مِن دَابَّةٍ فِي الْأَرْضِ إِلَّا عَلَى اللَّهِ رِزْقُهَا. Every living being, their sustenance has been clearly decided by Allah subhanahu wa ta'ala. So we don't have this problem. So this is one of our basic beliefs, fundamental belief that Allah has decided our sustenance, but we have to make a reasonable effort to make it in a halal way. So there's no doubt the sustenance is decided, but we have to make a reasonable effort. But in the meantime, it has to be on a halal way. Number two, we have a concept called barakah, right? So barakah is something which you have to enjoy and see. You cannot put in numbers. Barakah cannot be explained by that, but we can see when we follow the commandments of Allah subhanahu wa ta'ala and the way the teaching of Rasulullah sallallahu alayhi wasallam, this barakah is being found. So barakah is when the same need is fulfilled through a limited resources, or with the limited resources, our more number of needs, multiple needs or wants can be fulfilled. Then one more thing, Islam discourages greediness. There's no greed in Islam. Islam clearly says, in one of the hadiths, I think it's mentioned that Sallallahu Alaihi Wasallam said, beware of greediness, because that was one of the main reason why previous ummas got destroyed. So there is a line which needs to be drawn clearly.
On
This is my limits, and if I
mm,
if I cross it, that means I'm moving out of my limits. Now we know any business or anything when we get into production, we work this four types of resources. We have land, we have labor, we have capital, and we have entrepreneurship. Now, land is natural resources and anyone who owns natural resources, the return what he gets is known as rent. In the meantime, labor is, which is known as human capital. Now, we know there are software engineers, even though what we have been taught in small days, human capital means you have to go work. No, not necessarily. It can be physical, right? It can be mental resources. It can be anything additional. So against that, he gets a salary which is known as wages. Now, let me skip capital and come to entrepreneurship. Okay, the third one is capital, that is man-made machinery, the machines what we use to produce goods and services, right? So natural resources is land, labor is the people who are involved in it. Then we bring in machine. So the for the machine, the return on that is known as interest, and let me explain it to you along with the next slides. Then the fourth is the person who mixes this land, labor, capital together, and if he is taking a risk, right, for that he is rewarded with something is known as profit, right, which is highly encouraged in Islam. Now this portion, this interest, what does this interest means? Now remember, there are two types of capital. One is known as accounting capital, one is known as economic capital. Now, accounting capital means what we say when you start a business, the money what you put initially is known as capital. We know to start a business, we put 100,000, 1 million based on different requirements. In the meantime, economic capital means the machinery which is being used to start a business. Now, when you want to start a business or a production line, when you need machines, sometimes you will not have money to buy those. Then you have to borrow, right? So even in economics, what they say is capital is not, in economics, capital is not the money what is being put to start the business. It's the machinery. But to source the machinery, you might need to borrow the funds. So that is the interest which is discussed in economics in general. Now, in Islam, what we say is, even if you are supposed to buy these machines, you're not supposed to borrow money, but you have to work out on different mechanism. It can be a murabaha, buy and sell. It can be a musharaka, that means a partnership, or different ijara, which is a lease. We can work on different structures. Now, this interest, right, is one of the biggest causes of destruction in the financial sector. We know this interest is one of the biggest causes of financial destruction, right? As we see, every dollar bill, right, every dollar bill clearly states that in God we trust. If you see, it can be a $1, $5, $10, $20, $50, $100. It carries this thing called in God we trust. But the same teachings, which through the God, the divine religions, which teaches us, says interest is haram and prohibited. But unfortunately, including us, most of us, we have got caught to this system, interest-based system, and we are just entangled or got caught to the whole thing, and we are unable to come out of the problem. Now, okay, now the problem, the whole problem of this interest, if you see, before we discuss the interest and the related stuff, let me take you to the evolution of the currency, right? We know currency, before currency, at the beginning, right? We had physical objects which were used as currency. Whatever at that time which were known as valuable were considered as currency to buy and sell. Then we came to the barter system, right? So people who had excess stuff would give, and against that they will borrow whatever they need, right? Then we came into precious metals, that is gold, silver, right? Then the same precious metals were used as metal coins, gold, silver coins. Time of even the time of Sahabas and Prophet Sallallahu Alaihi Wasallam, we heard the narrations talk about the dinars and dirhams. Then we have come to an era which is known as paper money, which we are using today, right? Then now we are also into the system called plastic cards, right? We have debit cards and credit cards. Then we have bank transfers, which is electronic money. We also have cryptocurrency, and the latest is decentralized finance. That is peer-to-peer financing, someone buying and someone directly funding, and there is no regulation. This is known as the decentralized finance. This is how the evolution of currency and transaction has taken place within last several decades, several centuries. Now, now we have something called paper money, right? This paper money, which is also known as fiat money. Now, the 100 rupee note, the 1000 rupee note, right? The $100 bill, everything is known as fiat money. Now, if I take a piece of paper and write as 100 and go to a shopkeeper and give him, he's not going to give anything against that. I can write $100, I can write $500, I can write whatever, but there is no, he's not going to, against that, he's not going to sell anything to me. The main reason is there is nothing, there is a, what do you call, there is no general acceptance for that currency because it has not been endorsed. Now, this is a Sri Lankan 1000 rupee. Why there is value for this is we see in Sri Lanka, in Sinhala they have written Sri Lanka ආණ්ඩුව වෙනුවෙන් නිකුත් කරන ලද මේ මුදල් නෝට්ටුව ශ්‍රී ලංකාව ඇතුළත ඕනම මුදල් ගන්නක් ගෙවීම සඳහා නීතියෙන් වළංගුය. This currency which is been issued for the Sri Lankan government and it is accepted to for any transaction, any legal transaction, this can be utilized. Now, this endorsement gives that power of fiat money. Because of that endorsement, people are now willing to buy and sell against this. Now, when did this fiat money come into place? Fiat money, right? When did they come is, they say it was gold what we've been transacting up to recent times. Then gold was used as a standard. Gold was used as a standard. And against that, USA and even Germany and France, they started issuing their currencies against gold standards. That means always when a currency is been issued, against that they had equivalent gold. It went up to the Second World War, and after that, the US government decided that they are not going to use this gold and it's going to only use fiat money. From one side, in terms of mobilization, in terms of breaking into pieces, I mean, having small transaction, even though it's really convenient, but the problem is the real value of currency was taken off when this transformation took place between gold and paper. Now, any government can come and print money. Yes, they have indirect or direct effects as well, right? Can come and print money and get along with their transactions. But the real economy, which we talked about here with gold and silver, now we have lost that part. And now we are talking about paper money, which is available from one side. Yes, they have its own advantages, but in the meantime, it has become something where anyone who has paper money can go and buy natural resources from an African country. So without having any resources, because you have standardized paper money, now you can go and buy anything around the world for that same cash. Right. Now, in Islam, money is viewed as a medium of exchange. That means to buy and sell, money can be utilized. Again, money can be utilized as a store of value. That means I say in my bank account, I have 5,000 rupees. I have $2,000. This is known as store of value. I can use unit of account. That is to say this mobile phone is 10,000 rupees. This laptop is 150,000 rupees, right? Or $500. This is known as unit of account. Then standard of deferred payment. If I borrow 100,000 from someone, I say I will pay you after 1 month. I am supposed to pay 100,000. So money can be used as medium of exchange, store of value, unit of account, and standard of deferred payment. But money has no commodity dimension. That means you cannot buy money, you cannot eat money, you cannot drink money. Money can be utilized only among these four things, but there is no intrinsic value for money if it's not, there is no intrinsic value given for money in Islam. So that is very important to understand. So whatever the money we deal in, we have been clearly said, money is being utilized. You can be used for these four purposes, but you cannot take money today and ask additional money or give additional money for a later date, which is known as interest. So this is one of the biggest problem in the whole economic system under what we are facing through. So if you go through the basic prohibitions or the ethical practices which have been taught in Islamic economics, right? We say riba or interest is prohibited. We know that, right? Now, interest can be in different forms. it can be in late payments, it can be in early settlements, right? So different forms now, interest has come into such an extent, even our electricity bills, even if it is delayed, interest is being charged. So we have to be very cautious about that. Then Islam also discourages any transaction which goes under uncertainty. I think last session was taken by Mufti Sharaf, and he explained in detail what is uncertainty, what is gharar, right? So uncertainty is highly discouraged and prohibited in Islam. Then games of chances, right, where one person wins and other person loses. These are also, it can be gambling, it can be different types of draws, which comes with terms and condition. All these are clearly prohibited in Islam. Then one more thing, in Islam, Islam highly encourages a moderate aspect in terms of consumption, in terms of profit taking, right? To such extent, I think the hadith says moderation in economy is half of life, right? So moderate is very important, not only in consumption. That means I shouldn't have everything. In terms of even profit taking, I should be moderate, and I should have a, what do you call it? All of us should have the community feeling where not only me, even others have to benefit from transaction or whatever things we get involved in. Then one of the main other thing is avoiding undercutting, running down, or criticizing unnecessarily. Yes, there can be real reasons of doing so. Other than that, just because of competition, we are not supposed to undercut, right? Creating a bogus demand. We know there are companies, because the economic system is such, there are monopolies. That means only one supplier in the economy, just to maintain his maintain his price and demand. Whenever a small trader or dealer comes into the same business, he will be sent off through different. There are price wars. There are different advertisements. Or he will push the price down purposefully to make sure the newcomer is unable to take the cost and the losses. So all these are clearly discouraged in Islam. Then Islam also says, don't sell what you don't own or what you don't possess. If you don't have it in your hand, you don't sell it. But again, there are different rulings and conditions in terms of drop shipping, and other criterias are there. So other than that, in general, if I don't own it, I'm not supposed to sell it. This is mainly related to transaction like short selling. Then Islam also highly discourages greed, that is more than what I need, more than what I want, right? Just greed, just accumulation of wealth unnecessarily, where the whole day, morning to evening, the whole purpose is accumulation of wealth. This is highly discouraged in Islam. Then one more thing, when someone is in trouble and when someone is in distress, it is highly recommended to give time. Islam says, once, according to one hadith, Nabi Sallallahu Alaihi Wasallam said a person died. When he was resurrected, Allah subhanahu wa ta'ala asked, what good deed you had? He said, Ya Allah, I used to be a businessman, and whenever businessmen need more time, for the able, I used to give more time. And the people who are unable to pay, I used to cut off or reduce their debt burden. Then Nabi Sallallahu Alaihi Wasallam said, that person was forgiven. That person was forgiven. Right. Now, what are the key differences between conventional and Islamic economics? Right. Uh, the key difference is the primary goal. The primary goal of Islamic economics is social justice. Everyone has to have the best, right? And it has to be equitable and ethical welfare, right? Now, ethical welfare means everyone in the economy it has to be good. Anything goodness will be highly recommended, not only profit taking. But we know in conventional economics, anything which is profitable and which contributes to the economic growth, it will be highly encouraged. Very simple examples. Why countries produce arms and ammunition, right? We think when two countries are fighting, the world is actually sometimes they sadden, some are actually encouraging. The main reason is they are the suppliers of arms and ammunition. It's highly profitable business. So for them, people dying, people in distress, people facing problem is not a problem, because they are getting money against that war. They create wars. We know, if you see, there are many documents and documentations around. People create war just to make profit out of that. Same applies with drugs as well. Why drugs? We know what do you call ice or whatever drugs which have been produced in different countries. People are dealing because they want to have quick money. These are highly unethical, right? So this ethical conduct in terms of fairness, social good will be considered highly in Islamic economics. But in the meantime, conventional economics will not give any importance to that. Sometimes it gives up to certain extent, but almost market efficiency. Whatever is highly demanded, whatever is highly supplied, will be supplied to the market. Then the market behavior, that is whatever is required by the market, that is mainly profit driven. Comparative markets will be focused. In the meantime, Islamic economics will look into risk sharing, fairness in transaction as well, along with ethical behavior. If you know it is bad for the society, those goods and services will not be produced in Islamic finance, in Islamic economics. Then wealth distribution, we know on an individual basis, even though there are international organization which works for the betterment of the society, but overall wealth distribution will take place in a very, very minimal manner. Everyone is focused on how much are we going to accumulate wealth. But when it comes to Islamic finance and economics, it's all about zakat, charity, give, you get more. The what do you call, the akhirah and the hereafter is highly encouraged. In the financial instruments, we know it's all the transactions, almost always it is interest-based loans. We have bonds, stocks, derivatives. But in Islamic finance, we have profit sharing, then along with that loss bearing and asset-backed transaction. In terms of regulation, market and government intervention up to certain extent, but in Islamic finance, Sharia law comes as first, that is Allah's and Rasulullah sallallahu alayhi wasallam's teachings, equity, and all the prohibitions and harmful practices needs to be eliminated from Islamic economics. So we know there is a clear ruling in Islamic economics what can be done and what cannot be done. But when it comes to conventional, anything which is more profitable, irrespective of being good or bad to the society, they will consider up to certain extent, but main is profit maximization, growth of the economy, and what is demanded or required by the economy will be supplied. Now, these, sorry, these are few news items which were in the, what do you call, the papers, which was carrying the papers in 2010, right? Between 2008 and 10, right? Which was known as the financial crisis, or also known as Great Recession, right? It clearly shows that overall big names, big companies, financial institutions started crashing out, and we had a huge problem. We are talking about something which took place 16, 17 years ago. Right. Now, okay, what happened in 2008? Right. US market, right? I'm just taking this as a case study. I'm taking all then along with an example. US market, especially their real estate market started growing. Along with that, we also saw some of these Middle Eastern countries also growing in terms of their real estate. Now, when a sector keeps on growing, and if it is the growth is what do you call, compounded by several times, and it's not realistic, we know the crash is imminent. So what happened in the US market? The land prices started soaring, it started increasing, people started buying, right? Someone from the even Middle Eastern market was quoting at that time. Now, if you go for an example, if you take a country like, for an example, Dubai. Now, at that time, 17 or 20 years ago, they had land, especially the non-developed sector, right? You will get a GPS code, you'll go there, you'll be in the middle of the or in the side of a desert, and they say this is the land we are going to sell. So there'll be deeds for that. It will be sold, you will be buying, right? The land which you bought, let's say for the example, or the unit or the apartment which you bought for 100,000, still they have not structured anything, or only they have demarcated, which was bought for 100,000 dirhams today. That ticket, you have paid only 5% advance, that is 5,000 dirhams. After 1 month or 2 months, the same ticket will be sold for 7,000 or 10,000 dirhams to another person. The person who bought at 7,000 dirhams, he will sell the same ticket after 1 or 2 months for 10, 15,000 dirhams. That means the construction has not taken place or development has not taken place in that pace, but in the meantime, the price of that land of the or that unit keeps on increasing without any proper development. Something similar to this started taking place in US as well, right? The land prices kept on increasing. So people started buying. We know banks and financial institutions usually offer 20 to 30 years long-term credit for housing finance. So housing finance became very lucrative, right? Because they know against that they have an asset. In case if the customer defaults, right? In case if the customer defaults, they can have the asset back. This was the whole purpose. Now let's say Bank A has 1,000 customers who have taken bank loans against housing finance. Now they will grade these 1,000 customers and see who are the best customers, who are the middle range customers, who are the low range customers. Now, when you grade this, right, these houses, there are different types of grading. One is high quality loans, one is mezzanine, other one is third one is known as subprime, the people who don't pay on time. Now, these housing loans will be sold back to another company, another financial institution at a low return. For example, they'll be selling the low return ones, the high quality loans at 5%. The mezzanine maybe will go at 7 to 8%. The subprime, the chance, because they have already experienced around 2 to 3 years with these customers, they know these loans, these what do you call these customers may default or delay. So these loans will be packed and packaged and sold to third parties at high interest rates. It was taken at maybe 7 8%. Now it will be sold at 10 12%. These are known as mortgage-backed securities. Mortgage-backed securities. And they also had a condition called adjusted rate mortgages. That is, as and when the economy is not doing well or due to different reasons, the financial institution has the privy or has the right to increase or adjust the rate of return or the interest. Now, those subprime loans, sorry, those subprime loans started increasing, and most of these financial institutions started buying and selling on these subprime loans. Then between 2007 and 2009, there was a recession period in US. Recession means when overall spending of people, goods and services, production will come down, spending will come down, right? And overall, the economic activities will become slow. When when economic activities become slow, then people will not spend. That means production will come down, means less people get jobs. When less people get jobs, they are unemployed. That means they don't have money to spend. When they don't have money to spend, they won't have money to buy goods and services. You call it as downward spiral effect, right? So overall, the economy will come down. When this happens, people will not have money to pay to meet their basic needs. Then gradually, the first thing what they are going to default is the bank payments and those things, because utility bills will be paid, because if not, electricity will be disconnected. So bank and other payments, which are considered to be one of the last payments to be done, will be defaulted. So with the recession, the property market started crashing. The property market started crashing. People felt, now I have taken a higher loan, my property value has come down. So let the bank come and take my property and go, because I am unable to pay, because my loan value is 100,000. The property value is only 80,000 rupees. That means my property is less valuable, and I have to pay interest on top of that. So my property is less valuable. So let me default. So those type of defaults started taking place, and it affected several companies, several type of companies, financial institutions, and insurance companies as well. And overall, there was a huge crisis all over the world. Now, these pictures, for example, now people carrying these boxes, right, going, these were actual pictures published by BBC and others in that time, showing that Lehman Brothers, one of the oldest financial institutions, right, oldest financial institution, which started in 1880s, closed down. And these pictures shows that employees of Lehman Brothers are leaving their company. They are just packing their personal belongings and leaving. So what happened with Lehman Brothers? almost when the financial system is so huge, we feel no, it will not crash. We call too big to fail. It's huge. No, it won't happen. So Lehman Brothers, something a company which was founded in 1840s or in 18 that is almost 150 200 years ago. 150, sorry, 150 years ago. Now, this company, they started as a commodity broker and they grew so much, they had around 25,000 employees worldwide. During the financial crisis, they were managing $639 billion worth of assets against a liability of 613 billion, right? Now, what happened with Lehman Brothers? Lehman Brothers, they had a large sum of mortgage-backed securities. That is, it was told 85 billion worth of mortgage-backed securities, right? Now, one of the biggest problem is when people know that bank is having problem, right? They tend to go and get their money back, withdraw the deposits fast. Now we know bank doesn't have their money kept almost always the all the deposits in cash. That means they cannot run a bank. What do? 10%, 15% might be in liquid in different forms, and almost all the others will be invested in different types of assets. So as any financial institution, Lehman Brothers also had invested in different type of investments, including mortgage-backed securities. And as I explained to you earlier, most of these were related to the US property market. So when the market was coming down, right, Lehman Brothers were looking at different options. They went and issued preferred shares and brought in some money. They attempted to raise new equity, and up to a certain extent, then after few quarters, they couldn't perform well. When they announced the financial performance, it was a significant loss. When there was a loss, and when people start mistrusting the company, Moody's, which is a rating company, they started downgrading. When you start downgrading, what happens? New financial, especially investors, will not come in. So investors were reluctant to come and put money, right? In the meantime, short sellers, people who buy the share and want to sell at a low price, they were very happy. They started buying Lehman Brothers and shorting. So the prices were coming down further. So Lehman Brothers went and approached government against a bailout. Bailout means when government comes in and buys and pays the depositors. Why government comes in is in economics and in finance, we know one of the main institution is a bank or a financial institution, because we know through the banks, government can monitor what are the financial transactions taking place in any economy. But when people mistrust the bank and there's no trust on the financial institution, people tend to keep the money away from banks, means there is an informal economy which will be creating, and government will not know how much transaction taking place informally. So all the transaction will be on money to money. There won't be deposits, there won't be uh, loans or transaction taking place. It will be very less. And people will start pulling out money from the banking system as well. So people went asking for their deposits. They couldn't pay. So Lehman Brothers, a huge company, right? Which was over 100 years old, right? They couldn't take the hit, and government also didn't support it. The CEO comes and says, no, we are getting new, we will be arranging new capital, and we can find out, we can find our ways. Our assets has been really, properly evaluated. After 5 or 10 days, he comes and announce, and they file for bankruptcy. So overall, what happened into between 2008 to 2010? This is the summary, right? Nearly 30 billion federal guarantees were dealt between companies, right? Government had to come and what do you call bail them out, because as I told you, government doesn't want people to lose trust on the financial institution. So they came and they bailed out as much as possible. So overall, there was a domino effect. We know the real estate market was this size, right? Then because of the real estate market crash, there was defaults on the loans, right? Because there were defaults on the loans, there were default on MBS, that is mortgage-backed securities. Then there was something called credit default swaps. Credit default swap means in the financial system, what they did, the loans which you think which can be defaulted, you go and take an insurance cover against that. You go and take a insurance cover against that. So that insurance cover will, in case if someone defaults, that insurance cover will pay. Right? These are known as credit default swaps. All the financial institutions at that time went for credit default swaps, and it was in runnings into millions or trillions. So overall, nearly 7 million people lost their jobs during these 1 to 2 years, right? The total loss was over $7 trillion, but it was more than that. It was very difficult to assess because on a minor scale also things got affected. Then there are domino effects, spiral effect, because in only one falls. Because of that, many other spending and many other spending patterns and consumption pattern also get affected. And unemployment in USA almost reached 10% during this period. So what did really happen? What was the real cause? Right. The main problem is interest and compounding. We know all these loans are interest-based loans. If the same thing happens in an Islamic financial institution, when these houses are transferred from here, from this individual house to the company, to the banks, and from the financial institution to mortgage-backed securities, it's not the loan which will be transferred; it will be the asset which will be transferred. So when a loan is being transferred, what happens? Only one transaction will be get defaulted because there have been many other transactions built on these transactions. All the other transactions also get defaulted because the asset has not been moved out. Only the papers have been moved from one person to another. And number two, selling debt. Islam, we clearly said you are not supposed to sell debt. Debt cannot be sold. If you are selling, it has to be on par. You cannot make money on that. Then the other thing is greed, right? Greed. Because of greediness, only people started short. They will short it, the investments. Then they'll keep on accumulating because they know they cannot hold it, but still they will increase their portfolios and the risk and the leverage further, because most of these companies, the financial institution, compared to their financial size, that means the equity, their assets, especially the loan values and what they have taken and given, were much higher than that. Then number four, they started selling what they didn't own. You're selling what they didn't own means you just pass the documents and you don't own it. That means risk is passed, but even you're also one of the ring in the whole chain. Then there were opportunists who made money out of other people's distress situation. Now, International Monetary Fund did a research and they issued a report after few months or years after the crisis. These were the findings they found. Number one, Islamic financial institutions were affected, but the impact was very, very less. Why Islamic financial institutions? Most of the Islamic financial institutions which were got affected because they have direct investments with these financial institutions as well in terms of buying and selling. So through that and because of the real, what do you call, the US economy fell down in terms of real estate market, they got affected. But their effect was very less. The impact was very less because they had really invested in real assets and there were no transfer of documentation. The number two, there is no interest and there is no compound effect. No interest means there is profit, there is rental, but against that, always you're owning an asset. It's not just charging on top of that. On delays, you further charge, purchase that, and start enjoying. Number three, no sale of debt. When you sell debt, that means you are supposed to charge further that. That also doesn't happen. Now, the second part of it, we said now this part up to this, these were the prohibition in Islamic finance and Islamic economy. And when the world or whoever doesn't follow those, these were the repercussions and these were the solutions given by Islamic finance as well. In the meantime, Islamic economics also offers these facilities, right? We have Islamic safety nets, right? We have zakat, we have sadaqah, we have wasiyah, then gifts are highly encouraged. Then there is waqf, endowment, then kafara, then whoever wants to, in case if he has not fasted or if he have done something wrong, he can do certain offerings. And there are others that is like another people keep near and start spending. Okay. Now, zakat. We know zakat is compulsory on rich, right? Anyone who is zakat eligible, sorry, zakat, where his zakatable assets reaches 1 year completed and his nisab, he falls into that, he's supposed to pay. Now, how big is our zakat funds overall, right? According to 2019 data, right? It is considered, according to National Research Training Institution, 2019, which was the available data, it is between 550 billion to 600 billion dollars. The zakat, overall zakat, which are available in the market, right? But there are unaccounted several other zakat in institution wise, which has gone unaccounted, then on an individual basis as well. So these numbers should be, and this was 2019, 5 to 6 years back. Definitely overall, what do you call it should be, it should do better than this, right? Then we have sadaqah, voluntary payment. We know sadaqah means it can be our always, almost always, sadaqah payments are much more than zakat payment as well. Sadaqah payments are much more than zakat payment because we know zakat usually we calculate and pay once a year. Sadaqah and the voluntary payments are much more. Then why we have included personal and corporate means corporate, we know, especially Islamic financial institutions, they have there's something called charity accounts. Sometimes they run into millions of rupees. Why charging charity? We know that's a different argument, just to discourage purposeful delays and so on. Or if the transaction has gone against the Sharia, that money also can be allocated under charity, but that charity will go to the need and the poor. So that also is a huge amount which comes under the Islamic financial system. Then we have wasiya, that is the last will. We have been clearly guided how to write a wasiya, how to write a last will. At least one third, up to one third, we can write to whomever we want. Then we have been highly encouraged to write to the family and so on and so forth. Then we have gifts. Prophet Sallallahu Alaihi Wasallam said, exchange gift, it will increase love between you all. Then we have waqf, that is endowment, right? That is also, we know endowment have been there because Usman radiallahu ta'ala anhu, he did a waqf, he did an endowment at the time of Prophet sallallahu alayhi wasallam. That is considered to be one of the best and the oldest waqf, the well of Usman. And based on that, there are several other investments has been made by now. In Medina, it has been told. Then we have others like Nadir, we keep Niya, that if this happens, I will pay this. So these are all Islamic safety nets which encourages. So, in a nutshell, we know Islamic finance, Islamic economics, we have two sides. One, what has been prohibited, prohibitions, and the guidelines which have been followed and advised in Islamic finance. So, if we follow those, it will be much easier, much better for a better financial in economic activities. In the meantime, we have safety nets and offering which comes from Islamic finance. If those are also been clearly guided and clearly managed properly, I think the society at large can benefit. So then these are the, as a final slide, these are the offerings through Ummah. We do financial consulting, financial training, compliance audit, dispute resolution, financial product structuring, and since Ramadan coming, zakat calculations also can be handled. Documentation review in terms of transaction, investment of Sharia guidelines. If there are any questions, I wouldn't mind taking 1 or 2 minutes. If there are any questions on this, or if you need, if you can write to us, inshallah, questions can be responded inshallah accordingly. Jazakallah khair. If there are anything which was not clear, or you think that needs to be explained, you can write down.
Assalamu alaikum warahmatullahi wabarakatuh.
Assalamu alaikum.
I have a question regarding the insurances that sometimes you receive when you purchase electronics from stores. There are certain, of course, there are takaful insurances that come through
Yeah.
with the product, and that is of course governed by a body. But sometimes when you buy electronics directly from, let's say, the Samsung store,
Yeah.
Samsung itself provides you a warranty,
Yeah.
or a assurance that if your screen breaks or if anything else breaks, you can have an extended warranty and extended service and repair policy. What
Right.
is the take on this? Is this halal solution?
From what I understand and I've studied, now in this insurance transaction, in case it was in your case, you were not part of that transaction. It comes as an offering with the product itself which you're buying. So from your side, it is a unilateral transaction. That is, the seller of the good is also giving additional guarantee. So there is nothing wrong in getting that guarantee or warranty. It can be a cashback or it can be a one-to-one replacement. But soon as you get into a contract which makes a bilateral contract where you pay an amount and against that you get, then we are getting into a contract. Then it is not allowed unless it is a takaful transaction.
Um, Usually, it is an additional fee because the product is sold with its regular warranty. If there's any product oriented or manufacturing oriented defects, but when you pay